Welcome and thanks for doing this. Today we've got Kristen Popoff and Brooke Dilworth from BrokerLink. Kristen's the business development manager at BrokerLink, and she leads referral partnerships and community engagement initiatives across Alberta. She works closely with wealth managers, mortgage brokers, realtors, and other professional partners to build strong relationships and connect their clients with tailored insurance solutions. Kristen is passionate about creating strategic partnerships that add value, enhance the client experience, and support long-term success for both clients and the referral partners. Brooke is a VIP insurance broker with BrokerLink. She began her career in insurance in 2015 and has built her reputation as a trusted advisor and dedicated client advocate. Specializing in high net worth insurance, Brooke delivers customized solutions designed to protect complex lifestyles and valuable assets. Her expertise includes insuring multi-million dollar properties, luxury vehicles, private collections, ensuring comprehensive coverage at the highest level. She provides personalized advice, risk management insight, and proactive service tailored to meet each client's unique expectations and needs. So we're in good hands today. Thank you, Kristen and Brooke, for doing this. We'll pass it off to you. I'm going to disappear here so I'm not a distraction. And thanks for coming.
Awesome. All right. Good afternoon, everybody, and thank you so much for joining us. Thanks again, Greg and Brody, for organizing this session. So if everyone's ready, we'll get started. So welcome to Protecting Wealth Beyond the Portfolio. So today's presentation is a short, informal overview of high net worth clients and some of the trends and situations we see in the insurance industry and a few key considerations that we believe are valuable for wealth managers to be aware of when working with these clients. So to keep things moving forward, we'll make the best of everyone's time and we'll save all the questions for the end and happy to answer them during our Q&A session. So who we are, thanks again for the bio. So again, my name is Kristen. I'm the business development manager here at BrokerLink Insurance. So I oversee referral programs and community engagement initiatives, and I work closely with referral partners such as wealth managers, brokers, or mortgage brokers, realtors, real estate lawyers, and other financial professionals to help them connect their clients with the right insurance solutions.
And I'm Brooke, and I am a VIP insurance broker at BrokerLink, as mentioned. I've been in the industry since 2015. My expertise includes insuring high-value properties, vehicles, and private collections. Additionally, my team of dedicated VIP brokers have over 180 years of combined experience in this space.
All right, so who we are, who is BrokerLink? So a couple of fast facts. So we are an insurance brokerage, so not a direct writer. And so we have access to over 40 markets. And what we are is a national brokerage with local roots. So we're one of Canada's largest property and casualty insurance brokerages. We have over 5,000 employees to over 235 locations. But we also have local footprint in big cities as well as small towns. So, and we are proudly Canadian since 1991, along with more than 5 billion direct written premiums. So let's look at what an ideal VIP customer would look like. So when we say VIP client customer, that's high net worth and ultra high net worth individuals and their families, influential individuals and public figures, business owners, entrepreneurs, corporate executives, current or retired, professionals with significant professional personal wealth, like physicians, lawyers, dentists, on families with complex insurance requirements, and customers experience major wealth events such as a business sale, inheritance, significant property acquisitions. So when we say valuable articles or collections or luxury assets, we're including but not limiting, we say like include jewelry, fine art, wine, sports memorabilia, any other rare collections, and collector or high valued automobiles. So um, we also include customers with multiple properties, such as secondary or seasonal homes, rental properties, and U.S. residential properties. So why high net worth insurance matters. So I'm sure you all are very familiar with the life insurance aspect. So for our end, which is the home, auto, and such, we find the importance of this as in we see the importance of broader protection. So high net worth insurance isn't just about paying more, it's about broader protection, proactive risk management, and exceptional claims service when it matters most. So this includes high net worth brokers and insurers, who are built for customers with complex assets and multiple properties and lifestyles that essentially require specialized protection and personalized service. So when a loss occurs, the goal isn't simply to settle a claim, it's to restore the customer's home, lifestyle, and peace of mind with white glove level claims service.
One of the primary aspects that we're talking about today is properties. So why does replacement cost matter for your property insurance? When luxury homes are being insured, we look at it a little bit differently in terms of the cost to rebuild, because luxury aspects do cost more than standard builder grade items such as custom construction and premium finishes, imported materials and skilled craftsmanship, high-end technology and specialized home systems, other luxury features and amenities, including golf simulators, home theaters, wine cellars, pools and pool houses, all of which have been becoming a lot more popular in recent years, as well as the rising labor and material costs for these types of items. When we're looking at wealth planning considerations, we should be looking at insuring based on reconstruction costs, not market value. Those things are generally not the same thing. They can have a huge gap in between the market value versus the rebuild cost. Underinsurance can also expose customers to substantial out-of-pocket costs following a major loss. Premium materials, specialized craftsmanship, and custom features significantly increase those rebuilding costs, as I mentioned, and making sure that we have periodic insurance reviews is a good important component of a comprehensive wealth preservation strategy. Appropriate replacement cost coverage helps customers rebuild to the same standard without disrupting any of their financial plans.
All right, so let's look at one of our examples here that one of our insurance markets came across recently. So this is the situation being a customer spent years building a $150,000 climate controlled wine collection when the cellar cooling system unexpectedly failed and temperatures rose and hundreds of bottles of wine were damaged beyond recovery. So why this matters. So standard home policies may offer limited or no coverage for wine collections. So that being equipment breakdown and temperature fluctuation losses may not be essentially covered. So collection values often, as we know, appreciate over time, creating coverage gaps. So some wealth planning considerations for you guys to take away is the collection scheduled or is it separately insured? Or does the coverage reflect the current appraised value? Is the equipment breakdown coverage in place? And when was the collection last reviewed?
And this is a claims example that actually comes from one of our clients and one of our insurers who is Intact Prestige, where they went beyond the standard policy. Our customer experienced a major fire, resulting in a total loss of their home, requiring a full rebuild. The family wanted to remain in their neighborhood so that the children could stay in the same school. And a part of Prestige's coverage available within the policy was unlimited additional living expense coverage. So Prestige went out and actually purchased a home for the family to live in while their home was being rebuilt. The family lived here for 2 years while the repairs and rebuild were being completed, and all of these costs were covered as part of the claim, providing stability to the family during such a difficult time. And something that is unique to our high net worth insurers is the unlimited additional living expense coverage. Typically, with a standard insurer, this limit is about 20 to 40% of your insured dwelling value. So, for example, if your house is insured for $2 million with a standard insurer and you have a 30% additional living expense coverage, that equals about $600,000. This would eliminate the ability for the insurance company to be able to accommodate something like this. And think of how quickly this might run out if you had to rent a hotel or a home in your neighborhood long term during this 2-year period. Other property considerations are secondary homes and vacation properties. So as customers acquire additional properties, insurance programs should evolve to address occupancy, rental use, locations, and other potential liability and coverage exposures. These types of things can include vacancy risks, rental activities, cross-border considerations such as U.S. vacation homes and vehicles, rented or owned, as well as different types of property monitoring occurring in the home. So your alarm systems and what that looks like. So the main point here is disclosure. So whether that's for a vacation property, seasonal occupancy, rental use, etc., or even potential discounts with an alarm system. These factors can affect your coverage and your claims outcomes, and coverage is often available. Sometimes discounts are available, but insurers need to understand the exposure so that it can be properly underwritten.
So again, when standards aren't enough, so we look at the type of liabilities that, again, we come across. So with auto liability, the common exposures we know is serious injury claims and damages that exceed standard limits, along with future income loss claims. So a single accident can create a multi-million-dollar liability. With property liability, we see the slip and fall incidents, pools and waterfront properties, same with in vacation and secondary homes. And these property-related injuries, again, can result in significant legal and settlement costs. So with employer liability, that's household staff. So we say nannies, housekeepers, caregivers, groundskeepers. Household employee injuries may create unexpected liability and, again, legal exposure. So with umbrella liability, this is an additional coverage. This umbrella extends liability limits beyond underlying policies, and these limits available start at 5 million and go up to 25 million. And essentially, it helps protect wealth when claims exceed standard limits. So something for you guys to take away is, as customers, as you know, accumulate wealth, liability exposures often grow alongside their assets and lifestyles. So with this umbrella liability coverage in place, this can help provide critical protection when claims exceed standard home and auto policy limits.
And this is a claims example from one of our clients as well with Chubb Insurance when it came to their liability. So our customer was involved with a low-speed parking lot accident involving a pedestrian. The claims team at Chubb identified multiple indicators suggesting a fraudulent claim was being pushed forward by the pedestrian. Chubb proceeded with a comprehensive investigation, including surveillance and background research of the pedestrian, ultimately determining that they were lying about their injuries, trying to sue our customer for more. Chubb defended this claim for nearly 4 years, and the plaintiff ultimately abandoned the $4 million lawsuit. No indemnity payment was made on behalf of their customer, but all defense costs were covered by Chubb under their primary home and umbrella policies.
So along with, we talked about home and auto, we also wanted to talk about recreational assets. So as we find that that can be included in watercraft, so like boats and personal watercraft, which is included on, involves liability on and off the water, along with the equipment and accessories that come along with this, along with recreational vehicles. So as you have your motorhomes, travel trailers, and this has their seasonal usage considerations, as well as power sports, so ATVs, snowmobiles. That includes their off-road liability exposures that we kind of see, and specialty vehicles, so collector cars, golf carts, modified or limited use vehicles. So a kind of a takeaway for this is customers often assume that these assets are covered under their primary property policy, but overall we find that coverage may be limited or even excluded or require a separate policy altogether.
Identity theft and cyber protection coverage is also available. As customers accumulate wealth, they often become more attractive targets for fraud, cybercrime, and identity theft. Cyber protection and recovery services are becoming an increasingly important part of comprehensive wealth protection. In many cases, the risk extends beyond investment performance and traditional insurance planning. It includes protecting personal information, financial accounts, and digital assets. So, identity theft, wire fraud, account takeovers, and cyber protection coverages are becoming more widely available and an important part of preservation in terms of customers' wealth. And it's becoming a hot topic.
So how can wealth managers add value? So this is how can financial planning and insurance work together? Um, how can we work together? So when customers experience a significant asset growth, so increased net worth, investment success, business liquidity events, major acquisitions, additional properties, value collections, along with lifestyle and family changes, probably marriage or divorce, domestic employees, children in the household, along with estate and legacy planning. So wealth transfer strategies, trust structures, and perfecting family assets. So insurance should evolve alongside a customer's wealth, assets, and lifestyle. So, coordinated reviews can help identify emerging risks and essentially help coverage gaps before they impact a customer's financial plan. So, here's just some questions for to ask your high net worth clientele. So, have you ever purchased any new properties or recreational assets recently? Has your net worth changed significantly since your last insurance review? Are there any collectibles, wine collections, jewelry, or artwork underinsured or uninsured? Do you own property outside of Alberta or Canada? Do you employ household staff? And when was your last comprehensive insurance review? So maybe these are questions you guys already asked already, but we find that these small questions can help uncover significant risks. So why partner with a high net worth or VIP insurance specialist such as Brooke? So basically, essentially partnering with someone with this expertise is helps protect the lifestyle your customers have worked so hard to build and maintain, and as well as identifies coverage gaps that standard policies may overlook, along with enhanced asset protection. So provides comprehensive protection for complex personal assets, along with that white glove claim support. So delivering an exceptional claim experience when customers need it most, and essentially overall confidence and peace of mind. So this gives your clients confidence that their insurance keeps pace with their evolving needs.
So these are some of our markets and special programs. One of BrokerLink's key advantages is access to a broad network of leading insurance carriers. The insurers shown here are just a sample of the markets that we work with across both standard and high net worth segments. But this gives us a flexibility to find competitive coverage and pricing while matching customers with solutions that fit their unique circumstances. Our dedicated high net worth insurance markets include Intact Prestige, Chubb, and Aviva Ovation, who offer enhanced coverage options and specialized services designed for affluent customers with more complex insurance needs. Me and my team have dedicated access to and direct communication with these underwriters on this high net worth market side, whereas a standard broker or a direct to insurer company is not going to have the ability to quote or change coverage with them. Your clients may not be presented with these high net worth offerings with their standard broker either.
All right, so just kind of like the quoting process, the referral process that we see on like on my end. So again, this is a friendly webinar presentation, but if you do have more questions or want to talk about possible referrals, I provide each referral partner with a referral QR code link, which allows me to track referrals, ensuring they come directly to me. So this helps bypass phone queues, voicemails left on somebody's email, and help you connect with a broker that can connect with your clients quickly and provide a more personalized experience rather than a call center experience. So that being said, I always recommend as well making a warm introduction by email whenever possible. Just a brief email introducing your client and helps us, I guess, some context around the insurance needs, and that helps us follow up and more efficiently and essentially more smoother handoff on helping that create that client experience. Because referrals are, we take very pride on that they're a reflection on you. So we want to handle them the absolute best that we can. So again, thank you again. The purpose of today's present is not only to introduce you to our trusted insurance resource to your clients, but also provide education around like the unique, obviously, insurance considerations we see with high net worth clientele, individuals and families. So our goal today was to help to be a valuable extension to your team and providing expertise and a seamless referral service to the clients that you've worked so hard to build relationships with and help or work so hard to build that high net worth and then portfolio up. So we'll open up the floor to any questions, and I can pass this PowerPoint along to anybody or if they want more information.
Awesome. Thank you so much, Kristen. Yeah, if you could just stop sharing your screen and then we'll get to some questions here. So for first question, in regards to the rebuild cost versus market cost, how do you know if you're properly insured?
So we start with a third party rebuild evaluator is how we start. And then when we're looking at insuring with these high value partners as well, they actually come out and complete a rebuild appraisal on the home. So they look at the fittings and fixtures and the custom millwork and the countertops and the floors and all of that. And then they build that rebuild evaluation together and also offer risk management suggestions to the customers as well.
Perfect. And then I'd imagine that you'd have to do that on an ongoing basis as well. How often?
Depending on the circumstances, absolutely. So if you're going through a large reno or you're adding an addition onto your house or any of those types of circumstances, absolutely, we definitely want to review this regularly. Inflationary factors do get applied to renewals automatically, so it does try to keep up there. But when there are major changes happening, absolutely, we want to review that regularly.
For sure. And I'm thinking of an example of like a client who did like a specialty Italian marble in their bathroom, and then that material at a certain point no longer becomes available, so it's irreplaceable in a sense. How do you deal with a situation like that where maybe they come back for a reevaluation and there's now suddenly it was a really fancy bathroom and now it's a priceless bathroom. Like,
Right,
how do you look
absolutely.
at
So
that?
that happens all the time, actually. That your flooring is no longer available, your countertops are no longer available. The skilled craftsman that you worked with is retired, passed away, those types of things where you just can't replace exactly what was there before. And what insurance does is it replaces with like, kind, and quality. So if we need to go to a different Italian marble, obviously the client is going to be involved in every decision step along the way. Do they like the pattern? Do they like where this is, kind of going? But yeah, the intention is to replace it as best as possible. And if, say, the bathroom has been affected, but the kitchen is not, and it has matching, the insurance companies will go above and beyond and will replace both to match moving forward. That's not something that a standard insurance company is going to do.
Right, so it's really is a white glove service then at the upper
Absolutely.
echelon. I got a question. This was from a client that he's not here today, but he was in a meeting with me yesterday, and he's really big into AI, and now what he's doing is he's running all of his contracts through Claude and saying, do I have this rider? Do I have that rider? How does this contract compare to this new one I'm looking at switching to? Do you guys have any general high level tips, things people should be looking at within their insurance contracts? Like I'm thinking of like specific riders, specific language, or things that he could try out using AI to see if it can spot those differences.
He can certainly try. Now, the difficulty with using that is that you, like the AI needs to have those wording models or those contracts known to it to be able to provide that type of comparison, right? So things to look for would be, what are my exclusions on my policy? What is included on my declaration page? Do I have sewer backup coverage? Do I have overland water coverage? Those are the big ones. Water is very huge. What type of identity theft coverage do I have? There's so many different coverage options and add-ons that people can have. But those are some of the big ones that are affecting clients today that we're seeing huge payouts on or claims frequencies on. So those are definitely something that he could look for, but whether or not the specific wordings for each and every company are available, I don't know how accurate that's going to be.
Yeah, for sure. AI is at the stage where it can be pretty dangerous right now.
But that's what
Nonetheless.
we're here for. We see the wordings and look at them all day long. That's how we compare and know, and that's what we're here for.
Yeah, and then if you have,
Absolutely.
if I'll just add, and because I have like friends in they're lawyers, as in when you ask a question and they say no, that's not part of the contract or that's not covered, that's their word that is upheld and is in writing. While as if you ask AI and AI says, oh, you're good, you're covered, then you can't. Um, that's on your own, I guess.
For
Um,
sure. And
take it as it is.
not a new problem either. WebMD's been around for 10 or 15 years now, and people are self-diagnosing themselves with all kinds of medical issues. So I think it's an interesting tool for the curious. And if nothing else, people are maybe learning about subjects and coming, I notice in our industry, they're coming more engaged with some more base knowledge and some good questions. So I welcome the use of AI, and then we'll go up against it
I
any day.
certainly welcome the use of it as well. Is it going to be 100% accurate? No, but yes, it does, create more conversation and more dialogue over the subjects that you're asking and where to go next.
Absolutely, yeah. Just in regards to the some of the special features that you guys mentioned, like the unlimited living expense cost on a total loss of a house, are these sort of bells and whistles that are sort of coming along with this larger contract because the house is worth more, you get some more features, or are these some features that maybe someone with just an average house who wants a more specialized coverage or peace of mind could come to you for and shop for as well?
So it definitely depends on the client profile as to the acceptance into like a high net worth market. The unlimited additional living expenses and higher base coverages included within those policy wordings are going to be automatically included with one of these high net worth insurance companies. That is definitely a selling feature for them. Now, if we're looking at a I don't know, a $500,000 home for a rebuild cost, but the client profile, they're a lawyer or a public figure or have accumulated wealth and have a huge jewelry or like articles that they want to schedule. Like it all goes into consideration at the end of the day. Maybe their primary house isn't the biggest, fanciest house, and it doesn't need to be, but they've got a really cool um, lake lot in BC, right? That they spend a lot of time in, and like it's a client profile thing that is considered. So
That's good to know. What type of where would a person who's maybe they're building you go back to your example of the lawyer, they've sort of just bought their first vacation home and things are going well, their income is starting to grow. At what point should someone consider themselves high net worth to start, enough to start to explore a different insurance provider?
It would realistically come down to assets, both physical assets such as their houses, your vehicles, but as well as your wealth. Because, as mentioned in the presentation, as clients' wealth does grow, so does their exposures, right? So when they're starting to need a umbrella liability policy because they are becoming, more well known or more advanced in their careers or anything like that, we do kind of baby step the program in terms of coverage. Okay, this year, we might need an umbrella liability for $2 million, but in 10 years from now, we might need something for $10 million, which will include your home, your financial assets, and all other physical assets as well, your net worth essentially. We can baby step that coverage up.
Gotcha. What would be the starting point for someone to seek you out?
I'm happy to work with anybody, really. And,
Okay.
if they're not quite ready for that maybe high net worth market, but they're growing towards that aspect, we can start them with a standard market and, like I said, baby step them into where they need to be. But of course, we'll review everything with them annually. Part of my promise with my clients is I review all renewals annually. I reach out if I've got any questions. You're welcome to reach out to me at any time if you've got questions or changes to make. I'm there with you 100% of the way.
Love that. Thank you. What are some of the standard vacancy risk times, like you mentioned, leaving a property unattended? What do people need to know or watch out for in terms of their primary residence, or say they have a out of province cottage, or thirdly, like a out of country vacation property that may be rented part of the time but may sit empty for large parts of the year.
So, with things like that, when it comes to vacancy, there are two different definitions: vacant or unoccupied. So, those are questions that we would ask to find out what are the actual circumstances. Is this your seasonal property that you only occupy once a month for a week at a time, or every 6 months for a month at a time? What is it that we're looking at? Or are you between renters and you just don't have somebody living in there? You're not checking on it. Did you move out of this house because you're trying to sell it? What are the circumstances around that? So generally, vacancy, what that means is unoccupied without the intent to return more than 30 days. You should be
Gotcha.
disclosing it right away as soon as you know it's going to be happening, but it's usually more than 30 days where there can be coverage or claims issues.
Gotcha. So probably consult your existing policy, look for those times, and if there's a discrepancy, you should probably call and update your
Absolutely. And those definitions and what is included or excluded based on vacancy would be included in policy wordings on an existing policy, or consult with your broker, or
Are
yeah.
there any standard times like I've heard a rumor that the standard for a primary residence is 3 days, that if you're going to be gone away from your primary residence on vacation more than 3 days, that someone's supposed to check on the property. Is that a standard time or is it all dependent on your policy?
It is all dependent on your policy, but some insurers, such as Chubb, Ovation, and Intech Prestige, they don't have an actual timeline. 72 hours is recommended. And primarily, of course, we live in Canada, it's cold. Everybody snowbirds, or a lot of people vacation in the wintertime to escape the cold. The wordings will specify what that time frame is, but 90% of the time it will also specify during the regular heating season. So leave your furnace on so your pipes don't freeze and rupture, or whatever that means, or have somebody check your home.
Mhm. Perfect. What are some common missing coverages for ultra high net worth people? Like you mentioned, the like the recreation assets, boats, RVs, things like that. What are some common ones that you come across? Somebody comes to you, says, can you give me a quote? And here's my current policy. And you dive into that case for them, and they quickly realize that there's a whole bunch of holes. What are some of the more common ones that you see?
It could be as simple as a change of deductible, say for a vehicle, their current client carrier has them at a $5,000 deductible, but $1,000 may be available, depending on the client's risk profile. How much do they want to self-insure? So that's an easy one. For another one for vehicles is loss of use or accident waiver. If your vehicle is damaged in an accident and needs to go into the shop for repairs, do you get a replacement vehicle in the interim? Same with accident waiver. Do you have like a claims forgiveness, or are you going to be charged a surcharge for being in an at-fault accident? Those are common ones on the vehicle insurance side. On the property insurance side is water coverage. Water coverage is a huge um, discrepancy, maybe is not quite the right word, but there's huge fluctuations in what every insurance company will offer in your area. So maybe with TD, for example, you get $50,000 worth of coverage, but with one of our insurers, we can offer $500,000 in coverage. That's a huge loss and huge discrepancy, I guess is the better word.
Okay, so for sure, anybody with any significant assets should explore, at least get a once over of what they're dealing with
Absolutely.
currently. I wanted to just go back to the identity theft because this is very timely, and I know a guy here who went to Thailand and his phone connected to some kind of sketchy Wi-Fi, and that resulted in a breach of all of his information, including a sort of ransom takeover of all of his business accounts, social media, everything. And that's there's the business impact, the personal impact. It's kind of something that people don't realize how bad it can get, how quickly until it happens to them. So obviously, this is very timely and something that is going to become more and more commonplace, unfortunately. As much as we have encryption and security and VPNs, criminals always seem to find a way to find the back door and hijack your identity. Um, you know, what are what are some of the things people should be thinking about specific to identity theft? Is it just personal coverage? If they have a business, can the business be covered
Yes.
separately? Is it
Yes.
is it a package deal? How does that work? And is that part of this overall ultra high net worth big picture of general insurance, or is that something that people who feel they have a specific need for can seek out just identity theft protection?
So identity theft is something that is offered across the board. Like you're saying, it is a very hot topic of conversation, and it isn't thought about enough until it actually happens to you. So identity theft is covered across the board, but it's the cyber protection. So um, the recovery services, as well as like fraud specialists and all kinds of things that go into it. The cyber protection is more so available on that high net worth side. Not to say that it's not available with other markets, just the standard insurance market isn't moving as quickly on it in respect to how technology is moving. When it comes to your client, for example, who went to Thailand, the business was also affected. The business would need to have that cyber protection. There would be some coverage under a personal policy because it was on a personal phone or however that plays out. But it's best for the business to also have that coverage, and then they can really work in conjunction together and really get the client back to where they were before.
Awesome. So yeah, definitely something for everybody to consider. Brody's got a question for us.
Sure.
Yeah, so I know other asset classes have been like growing in popularity recently, especially with like collectibles and Wall Street Journal putting out so many different articles about the memorabilia and collectible market. When these are being looked at, like in terms of valuation, how does that like process look, and like who do you guys contact, and like how would a client even go about that process?
So the client would know best what their collection looks like, of course. We would recommend that they get appraisals completed by somebody within that industry. We also have resources on the underwriting side with our insurance companies as to, hey, we've got clients with sports cards that they want appraised. Do you have any contacts in the area, or do you have any suggestions for where a reputable appraisal program would be or be found? Generally, the clients know their collections best, other than in the case of inheritance potentially, but they would probably have those resources available to them. So we would suggest that they get appraisals done, and then we can schedule based on that value. And we recommend appraisals be done every 3 to 5 years because everything is appreciating. Not everything, but a lot of things are
Hmm.
appreciating.
Yeah,
Awesome.
thank you.
Thanks so much, Brooke. One more quick question for you before we come to a close. For the ultra high net worth people, do you guys do house calls?
Absolutely. Me and my team, we are all licensed and able to do home visits or meet the clients wherever they see fit, their homes, their businesses, coffee shops, if that's where they want. The golf course, we've met people on the golf course while they're playing their round. We're welcome to, or we're happy to go where they need us to be.
I'd say that's the personalized touch that probably matters the most to that group for sure right now.
Absolutely, absolutely, and via phone, email, in person, wherever, we're happy to be there for them.
Awesome. Well, thank you guys so much for your time and for doing this presentation for us. If anyone has questions or wants to talk to these ladies more in depth, please feel free to reach out to us or to them directly. We'll leave you with that for today, and there is a recording available if you feel you'd like to send this to a friend or family member that should see it.
Wonderful.
Thanks,
Thank you
guys.
very much for your time today. I appreciate it.
Take care.
Yeah,
Bye for now.
thanks very much.